So hi everyone, today what we studied, today we studied NBFC audit. So first of all, let's understand the definition. What is a non-banking financial company? So as per the RBI, the name contains the definition itself. Non-banking financial company means, first of all, you talk about the financial company. What is a financial company? Sir, it is a financial institution, which is a company. Oh my God, you got it right. What is a non-banking? Sir, non-banking financial company would mean a non-banking institution, which is a company. Plus, what do you think a financial company do? Receive the deposit, provide the loans. Receive the deposits, provide the loans. And the last part says any other institution which is regarded as an NBFC by RBI. Now, sir, whenever I say it is a financial company, whenever I say it is a financial company, what is a financial institution? The financial institution is a one which fulfills the 50-50 test. 50-50 test? Yes. 50-50 test means its financial assets should be more than 50% of the total assets. From those total assets, make sure you deduct the intangible asset. Okay, sir. And then the income from such financial asset is more than 50% of the gross income. So if your financial assets and financial income both are in majority, both are more than 50%, you call the 50-50 test passed. Now, if you have passed the 50-50 test, how much funds you need to arrange? Give me the answer in the chat box. How much funds you need to arrange? Sir, we need to arrange 10 crores. We need to arrange 10 crore and take the registration from RBI under section 45 IA. 45 IA registration karwaiye. So remember these few points, very critical for your exam. Company is equal to NBFC is 50-50 test passed. 50-50 test means financial asset more than 50% of the total asset. Income from such financial asset more than 50% of the gross income. If both the criteria fulfilled, NBFC registered with RBI. But remember, for registration you need a certificate plus minimum net owned fund of 10 crore. Now sir, in case of few NBFC, the limit is only 2 crore. Which are these NBFC? Which we study in base 1. Okay, sir. Now coming to the NBFC's categorization. They say when it comes to deposit taking, non-deposit taking, there is a very simple categorization which call it a first type of categorization. First type means either it will be a deposit taking. In case of non-deposit taking, what were the answers? Systemically important, non-systemically important. But remember one thing, the provisions are generally same for these two. That means for the deposit taking and systemically important, the provisions are similar. Got it, sir. Then we discussed about some companies exempt from RBI registration. Just give it a read 2 to 3 times. The last one is important. What? In case there is a core investment company, asset size less than 100 crore. And even if it is more than 100 crore, but it is not accessing the public fund, then no registration required. So sir, registration is only required if the asset size is more than 100 crore and it is accessing the public funds. You got the point or not? Yes, sir. Then sir, this part we have already covered in a separate video. Now talking about the difference between a bank and NBFC. How did we study it? Just go to the NBFC and say I want to get a current account. Nah. Saving account. Nah. Fixed deposit? Yes. So NBFC will say what? Sir, we can only accept fixed deposit. We can only accept a deposit in which the term is fixed. Why not current? Why not saving? They say that we cannot accept demand deposit. We need a money for a fixed term so that we can lend it further. So they say simple thing. NBFC can't accept demand deposit, but some NBFCs can accept term deposit. That is the deposit taking. Now, once I have got the deposit done, can I make the payments out of it? Can I issue a check on my account? The answer is no. NBFCs are not a part of payment and settlement system. But sir, my money is there with NBFC. Is it secured? The answer is no. The answer is no. They don't provide the DICGC insurance facility which is available in case of banks. And the last point was, you generally forget. So remember it on priority. Remember it on priority. That means the no minimum exposure to priority sector as in case of the banks. Now talking about the prudential norms, these are the general provisions you need to remember. First thing, capital adequacy ratio. What was the capital adequacy ratio? 15, 10, 12. Come on. 15, 10, 12. Tier 1 plus tier 2, 15%. What was 10%? Tier 1. And then in case you are lending against gold jewelry like Muthoot Gold Finance, Mannapuram Gold Finance, then in that case the tier 1 capital needs to be 12%. Then we discussed about the risk weights. Risk weights is basically how much is your asset risky. If I talk about the good assets, cash and bank, zero risk, money is there in your hand. Government assets, government security, central government security, state government security, all are risk-free assets, zero risk, zero risk. Interest on government security, zero risk. Sir, advanced tax, TDS, you are already getting the benefit, zero risk. But sir, what about central government guarantee? Again, zero risk. State government guarantee, 20%. State government claims which are not in default for more than 90 days, 20% risk. But if they are in default for more than 90 days, 100% risk. Got it, sir? Bonds of public sector banks like SBI, PNB. Again, the public sector banks are not government, but they have a feel of government. Since they have a feel of government, again 20%. And the last May there was 150% wala part. Sir, what was that? Post commercial operation date projects. Post commercial operation date projects, these are like your real estate projects which have been in existence for over a period of 1 year. Then again, your chances of getting the flat or getting the real estate is 50-50. So in that case also you say 50% risk, 50% risk, and in all other cases it is 100%. Now talking about this classification. So understand one thing, just consider this 6 and 18, ignore the 3 and 12 for some time. Got it, sir? So from the due date till 6 months, it remains a standard asset. After 6 months, it becomes a substandard asset and substandard for 18 months. And after 18 months, it goes into the doubtful category. And in the doubtful category, if you feel that you will not be able to realize it, it becomes a loss asset. Is this part clear? Yes, sir. Once again, from the due date till 6 months, it is treated as a standard asset. After 6 months, it becomes a NPA. In the NPA, the further sub-classification is for 18 months, it is treated as a substandard. After 18 months, it is treated as a doubtful. And once you lose the hope, once you feel it will not pay anything, it becomes a loss asset. Is this part clear? Yes, sir. Now this 6 and 18, this 6 and 18 will be treated as 3 and 12. In case of which NBFC? The big NBFC. The big NBFC, that is the systemically important non-deposit taking, and the deposit taking NBFC, the limits become 3 months and 12 months. Is this part clear? Yes, sir. Yes, sir, this part is clear. Now talking about this limit of becoming a NPA. Now talking about this limit of becoming a NPA, in this, instead of 6 months, I am not talking about the 3 months, this provision remains. Instead of 6 months, you will take 12 months. The 12 months in which case? In case the amount which is due is not an interest. The amount due is a lease rental. The amount due is a lease rental. You just need to remember this. So this is all about the classification. Based on the classification, you create the provision. Loss asset, 100%. Doubtful asset, again 100% if it is unsecured. Then for secured, just remember the table left and right. Left means up to 1 year, 1 year to 3 year, more than 3 year. Come on. Up to 1 year doubtful, 1 year to 3 year, more than 3 year, 20, 30, 50. Come on. 20, 30, 50. Substandard 10%, and in case of standard, it was 0.4% and 0.25%. 0.4% for bigger NBFC, so it is bigger, and for the smaller NBFC, that is NBFC non-deposit taking, it is only 0.25%. Just take a quick look at these limits. Now, sir, let's discuss about audit procedure. Let's discuss about the audit procedure. So the audit procedures are very simple. Understand the business. How you understand the business? Through the documents, through the people. Through the documents, through the people, check the MOA, AOA, business documents, business policy, and talk to the board meeting, minutes of the board meeting, and talk to the top management. Then you check the internal control, basic accounting system and internal control. The main point here was, sir, the people whom they are lending, these people are risky people. These people are risky people because bank is not lending to them. That's why NBFC is lending. Since these people are risky people, you need to see the system of recovery. You need to see the system of recovery, periodic review of all the advances, and you should follow up with the people. Then you need to talk about registration with RBI. Very easy point. Section 45 IA, check the registration. How do I check as an auditor? Sir, check the registration certificate. But NBFC says that we have applied for the registration. Then check the copy of application. Now, sir, next point is, whenever they are having deposits like a bank, they also need to keep some percentage in liquid assets like statutory liquidity ratio. So as per the RBI guidelines, they need to invest a percentage in the liquid assets. For this, you need to also file a quarterly return with RBI. Then we discussed about a very important directions of 2016. NBFC acceptance of public deposit directions 2016. Sir, what were the 5 to 6 points? Very easy, very comfortable points. First thing, whenever you see that the NBFC is accepting the deposit, when it can accept the deposit, when it is a deposit taking NBFC. That means in case of deposit taking NBFC, you need to see the appropriate classification. Does it make sense? Yes, sir. Plus the deposit, whatever I am accepting, what do I need to have? For accepting the deposit, I need to have something. Sir, what? Credit rating. So as an auditor, check the credit rating in case of upgrade or downgrade, increase or decrease the deposit. But if in case of downgrade before the danger level, that means that it has been downgraded below the minimum investment grade. What do? Don't accept anything fresh. Don't accept any fresh deposit. Got it? What about the current deposit? They will run till maturity. On the maturity, don't renew them. Don't renew them unless the depositor says in writing that he wants to get it renewed. And last May, inform RBI. Inform RBI within 15 days to the regional office of RBI. Clear? Then come the basic point. Check the deposit register, check the interest on the deposit, check the maintenance of liquid assets as a percentage of deposits. And in case NBFC says we don't have deposit, it needs to pass a ordinary resolution. Nah, sir. Special resolution? Nah, sir. Which resolution? Board resolution. It needs to pass a board resolution. So check that board resolutions. Clear? Clear. Then we discussed about NBFC prudential norms. And what do you mean by prudential norms? IRAC norms. Just a simple thing. IRAC norms, capital adequacy norms that we just discussed beforehand. So check the compliance with prudential norms. That is the capital adequacy ratio, IRAC, income recognition, asset classification. The way you classify, you create the provision for doubtful debts. Okay, sir. And one more important point was, whenever NBFC is giving the loan, it cannot give the loan against the security of its own shares. So if I am taking a loan of Bajaj Finance and I am also shareholder of Bajaj Finance, can I take the loan by giving the shares of Bajaj Finance as a security? The answer is no. So prohibition of the grant in loans against the own shares. Is this part clear? Yes, sir. Now expand these points. Expand this point of asset classification, provision for doubtful debt. So check the compliance with prudential norms. Assets are properly classified, standard, substandard, doubtful, loss asset, and accordingly the provision is made. Now talk about income recognition. In case of NPAs, income is not recognized on accrual basis, it is recognized on cash basis. Now another point about NPA. In case there was something NPA in previous year, it should be classified as NPA in the current year. In case of change in classification, check the compliance with RBI directions. And last point, sir, it is a very hatke point, so remember it like that. In case the board is granting or intending to grant demand loans, but sir, you said demand deposit is not allowed. Demand deposit is not allowed, but demand loan is allowed. So if the board is granting demand loan, check it has made a policy for the same. Then we discussed about classification of fraud by NBFC. It was simple: miss, fund, cheating. Okay, miss, fund, cheating, irregular transaction. Sir, what was miss, fund, cheating? There was a guy with some miss. She in fund did her cheating with him and it was a fraud. So miss, fund, cheating means misappropriation and criminal breach of trust. Fund means F, fraudulent encashment of FDs. Just keep FDs in mind. Fraudulent encashment through fraudulent instruments and manipulation of books of accounts. U for unauthorized credit facility. Was it authorized or unauthorized? Sir, unauthorized. That means in this case, if Srinath wanted a loan but he was not getting the loan. So what he did? He did illegal gratification. He provided a necklace to the NBFC employee and the employee gave him a loan. So how was the loan extended? The loan or the credit facility was extended for reward or illegal gratification. Got it, sir? And for negligence and cash shortage. So miss, fund, cheating and forgery. And then you talk about this story is irregular. Sir, this story is very irregular. That means the irregular forex transaction. In case there is a cash shortage more than 10,000, it will be treated as fraud. In case of cash shortage more than 5,000, it will be treated as fraud only if it is detected by some other person. Then we discussed about the checklist of NBFC investment and credit company. Here the keyword is investment. Where do you invest? Sir, we invest in the shares. So 5 points are of shares only. Sir, what are the 5 points of shares? First of all, physically verify the shares. But sir, today the shares are in demat form. So for demat form, check the contract notes, check the broker's notes. Got it, sir? Then you verify what? Sir, verify the depositories. Confirmation from the depositories. That means take the confirmation from depository, whether it is CDSL or NSDL, and confirm whether the shares are held by them. Got it? On the shares, what do you get? Dividend. Check the dividend income. Verify that the dividend income has been received in case it has been declared by the company, plus the interest has been accrued wherever due except in case of NPF. Got it, sir? Plus the dividend income should be realized on realization basis. So these are the 5 points you need to consider. Then comes, sir, before doing any investment, what do I need to pass? A board resolution. So through that board resolution, you will get it is a non-current or a current investment. Why we need to identify current, non-current? Remember accounting standard 13. AS 13 told you the accounting of current, non-current. So next point is check whether the requirements of AS 13 are met. 5-6 points enough. That's all that you need to do. Then we discuss about the duties to report. Yeah, everyone. So now we are going to discuss about the auditor's duty to report. So sir, duties to report is 3 phase wise. Okay? That means the common report that is to be issued for all types of NBFC, deposit taking or non-deposit taking. Then you talk about the reporting explicitly for deposit taking NBFC, and then the reporting only for non-deposit taking. So first of all, for all the NBFC, you need to see whether they have the certificate of registration. If they have the certificate of registration, whether they are fulfilling the principal business criteria. The principal business criteria means 50-50 test. That means your financial assets should be more than 50% of the total assets minus that intangible asset part. Your income from such financial assets should be more than 50% of the gross income as on 31st of March. As on the 31st March of that year. Plus the auditor need to certify it. Plus also they need the net owned fund 10 crore, 22 crore, you already know. Auditor needs to certify it within 1 month of the finalization of balance sheet or latest by 31st of December. No sir, 31st of December is for partying. He need to do it by 30th of December. Got it. Then in case of NBFC accepting the deposit, you just need to check whether it is as per the limit, whether it is as per the credit rating. If it is more than the credit rating, it should be reduced. It should be regularized in the manner required as per the direction. Or if it is, or if the rating is so low, if the rating is below the minimum investment grade, then again, you need to see whether they have complied with the direction. That means informing the RBI within 15 days, not accepting any fresh deposit, current deposit running till maturity, and then not renewing on maturity. Clear all the points? Yes sir. Then you talk about CRAR, if you are able to recall whether the CRAR has been properly arrived and it is as per the requirements. That means 15%, 10%, 12%. Got it sir. Plus on these deposits, report if there is any default, plus company is properly furnishing the returns with RBI. Then in case there is an NBFC not accepting deposits, the first 2 points are very easy. You need to check which resolution? Board resolution. Remember, board resolution for not accepting the deposits. Got it. Second thing is still check whether they accepted the deposit. Last 3 points are general. That is the prudential norms. Prudential norms means IRAC, income recognition, asset classification, capital adequacy. Then check the capital adequacy. This point is here also. Here also, okay? That means both accepting the deposit or not accepting the deposit. Which NBS was filed? NBS 7. That means you need to check whether the capital adequacy ratio has been correctly calculated. It is in compliance with the provision. Then you need to see the statement of capital and risk weighted asset. See the annual statement of the capital, funds and the risk weighted asset, and that's last point. And fifth point we generally forget because it is a micro point. So what was the micro point? NBFC has been correctly classified as microfinance institution. Then in case like a audit in case you give a qualified opinion or an adverse or disclaimer opinion, what you need to give? The basis for the same. Basis for qualified, adverse or disclaimer. Similarly in NBFC, in case you are giving an unfavorable or qualified statement, you need to give the basis of it. Now comes the most important topic, that is the exception reporting. So what are the obligations of the auditor when it comes to submitting an exception report to RBI? Baba, just understand one thing. Whenever you are submitting an exception report, when do you submit? When there is a non-compliance. Non-compliance with the para 3. Para 3 means these 3 things: C, B or A. These reporting parts, whenever you think there is a non-compliance, you give an exception report, or the person has not complied with these three things. So 3 is an unlucky number for here. Sir, what are these three things? Chapter 1B, 2B or 3B? 3B. Chapter 3B, RBI Act 2 of 1934. Got it, sir. Second thing, your favorite directions, NBFC, acceptance of public deposit directions, 2016. Then comes your NBFC, big directions, non-systemically important, non-deposit taking company, Reserve Bank directions, 2016. And the other two, you always club together. Like I already told you in the beginning of class, deposit taking and systemically important non-deposit taking are clubbed together in a direction. So you just say NBFC, systemically important non-deposit taking company, and deposit taking company, Reserve Bank directions, 2016. So whenever you are not complying with the same, exception report needs to be submitted. But submitted to whom? Central office or regional office? Always it is submitted to the regional office. Acha, which department? Banking department or non-banking department? Sir, non-banking department. So you need to make a report, unfavorable or qualified statement, to the Department of Non-Banking Supervision, Regional Office of RBI. Clear, sir. And one last point, very small point, it is an exception report. So please report, please, only and only report the contravention. You have to report the exceptions and the contravention. Don't report any compliance. Clear, sir. And now comes the last topic and another important topic, very, very cute and easy topic, Schedule 3. You understand Schedule 3? Yes, sir. Just explain the difference between the Schedule 3 of NBFC and the other Ind AS entities. So it starts with the P&L. In the P&L, whatever revenue from operations, OCI, whatever are the items inside that, you can disclose them on the face of P&L. That means not only in the notes of account, but also in the face of P&L. Got it, sir. Now with the person who you do the revenue, what is that person called? The debtor. In case of debtor, another 2 points. In case the debts are due from a LLP. Sir, what is so special about that LLP? In that LLP, your director, that means the director of NBFC is either the partner or a member. Plus that debtor, another trade receivable, that is risky. Significant increase in credit risk or it is credit impaired. Got it. These are the same terms you use in FR. Okay. Now comes the next part. Is the balance sheet part done? Yes, sir. Plus remember, in balance sheet, it is in the order of liquidity. Last part says other incomes and expense. Other income and expense you need to show separately if it is more than 1% of your total income. And in case of others, sir, what is the provision? In case of others, it is more than 1% of revenue or 10 lakh, whichever is higher. For Ind AS, I am telling you. And the last part, what is left? Sir, at the end, reserves are left. So in case there are any statutory reserves like security premium account, capital redemption reserve, can they be distributed as dividend? The answer is no. So in case there are any statutory reserves with some conditions and restrictions, please disclose them. Please disclose those conditions and restrictions, and here your NBFC revision ends. So maybe it took us 22 minutes 36 seconds, but yes, that's all about it. Caro 2020 reporting is the same we discussed in Caro 2020. So that's all. Thanks a lot everyone for attending this revision. Wish you the best. Keep continuing like this. Stay happy, stay amazing, and yes, let's catch up in the next class.